Now, Moody's is forecasting that the global metals and mining industry's earnings will increase by roughly 30% through to the first quarter of 2022. Now, that's off the back of a strong economic recovery as well as rising demand and tight supplies in some specific commodities, steel, iron ore and copper in particular. As the constraints from 2020 to ease and production returns to somewhat normal levels, Moody's is arguing that demand will recover more slowly for other commodities like aluminium, for example. It's a key metal for the global aerospace and automotive sectors. Nickel and zinc supply is also expected to increase, so markets on those three will likely be in surplus. The robust recovery of China's industrial activity has also led to a surge in demand for metals. China accounts for roughly half of global consumption, especially of industrial metals. So let's dig a little deeper into this story. Peter Major is a director at Cadiz Corporate Solutions. He joins us now live from Johannesburg. Peter, good to have you on the program tonight. Would it be fair to say that this is mostly a China-led recovery?
Yeah, it's not quite fair. China is leading it. That part is very fair. But the rest of the world is catching up. And we know demand in the rest of the world fell harder than in China, and it's picking up slower. But the rest of the world is going to be another 50%, and it is gaining traction. So you're correct in saying, Rama, it is led by China, but boy, these other 50% of the world is coming up quick, fast, and hard.
Okay, so Moody's is also forecasting a much slower demand recovery for metals like aluminium, sorry about that, compared to other industrial metals. But why is that happening at a time when we're now seeing that remote work and flexible work days seem to essentially become the norm? I mean, that theory would suggest that people might be moving around a bit more than they used to in the past.
Yeah, I agree with you, and I think it's hard to say why the base metals are lagging the iron ore and the platinum group metals, because those are opposite metals on the spectrum, right? You know, the whole platinum group metals, you're dealing in ounces, and in iron ore, you're dealing in billions of tons. And it's funny, those are the two metals that have gone berserk, that have gone in the stratosphere. Copper is the only base metal that's really running hard above its long-term average. Aluminum, nickel, zinc, even tin, which is doing very well, they're all trading a little above the norm. They're trading at good levels, but only copper is trading way above the norm. I think we can attribute copper to the energy, whether it's storage or transmission or going into electric cars. Iron ore, why is it trumping aluminum? It's not so much that the demand for aluminum has fallen. It's just that aluminum has huge supply. It's always had huge supply out there. So even if a couple of countries that supply the bauxite had dropped off, it's so easy for them to add another couple dump trucks, another shovel crane. Aluminum is a real bulk material. It's mined very shallow. It's mined on large scale. And you don't need to transport as much. Iron ore, you're talking billion and a half tons that have to get shipped to China. So it's the infrastructure of iron ore. You can mine a lot of it, but it's the infrastructure to move it. You only have to move 40, 50 million tons of aluminum bauxite ore. China, iron ore, you have to move billions of tons. But look, they're all recovering because production did fall in 2020, but demand has held up stronger and has taken off faster than the demand can catch up.
Okay, so
then the production can catch up. Apologies.
Indeed, and that production catch-up thing is something we've been discussing in the past. But let's look at specifically South Africa's mining sector, because the top line numbers look relatively good, relatively attractive. Revenue up almost 40%, dividends up 133% compared to 2019. But that's the top end of it. But what kind of damage are we not seeing that was inflicted by the pandemic?
You're bringing a very important point, and I hope the politicians are watching your broadcast, because they're the ones that need to open their eyes. Prices have covered up the destruction and the problems below. So it's not that demand for PTMs are really that much higher than before. It's just that supply couldn't keep up with the little increase in demand, and supply did drop off during the virus. epidemic at first. So these prices are masking a fall in production. And South Africa has a fall in production in everything, even the PGMs. Its iron ore is way down. But because the price is 3 times higher, that masks the production that's down 15, 20%. And the same with gold and the same with all of our metals here. And so when these prices start coming a little bit more to normal, then it's like you're pulling the curtain away. You're going to see who doesn't have the clothes on. And that is so important. And you have said, what what is hurting here besides the virus? And this virus was a good excuse for South Africa to say, this is why our volumes are down. But our volumes were going down before the virus. They're continuing to go down, and they're going to go down after the virus because we have huge underlying problems here. We have huge policy problems that discourage investment, that chase away foreigners, that make even the locals reluctant to increase capex. And we have transportation problems with railroad, with roads, with harbors. Electricity problems are huge, and everybody knows about that. So yes, these high prices are helping us, but we got to take advantage of high prices to fix these problems. They're going to hurt us when the virus passes.
Indeed. Let's see how this does play out. Peter Major, always a pleasure having you on the program tonight. Thank you.